All right, well, let's get started. Hello, my name is David Tolkien. I'm the Director of Business Development over here at Shop-Ware. Very excited for this week's webinar, Introduction to Understanding Your Shop's Financials. We've got Hunt here, who is definitely one of the industry experts in this field. If you've heard someone talk about accounting in the automotive aftermarket, you've probably heard something from him. Couple of housekeeping issues. If you have any questions, feel free to put them into the Q&A and we will make sure to get to those throughout the presentation. If you have something you'd like to add, you get 2 Shop-Ware bucks if you want to actually unmute yourself and make a comment. So we highly encourage that. Definitely want some participation. Other than that, this will be recorded, so you'll have access to it at the end of it. A little bit about our presenter today, Hunt. Demarest is a licensed certified public accountant. He's been with his firm since 2006, and they specialize in business taxes, valuations. He does a lot of consulting work. He works with some of our clients as well, all across the country. And they are a firm, correct me if I'm wrong, that specializes specifically in automotive. That's correct?
Correct.
Yeah. When he's not in the office, he enjoys spending time with his family, golfing, and working on his race cars. We were just chatting earlier. I know he's got 3 kids on the younger side of things, so which means he's got lots and lots of free time. So without further ado, I'll pass things off to you. I'll stop sharing my screen. You can take control, and let's get rocking and rolling.
Awesome. Thanks, David. Yeah, I just want to thank you guys for joining me. Thanks, David, for having me on here. So yeah, just like David was saying, my name is Hunt Demarest. I'm an accountant here with Paar, Melis Associates. We are an accounting firm based out of Maryland, and we specialize in automotive repair shops. So obviously, there's tons of accountants out there that do tax and accounting and stuff like that. A unique aspect of our business is to cater to this industry. 99% of our customer base is automotive repair shop. It's all we do. It's all we see. And so there's a lot of questions I get asked. I was just talking to one of my clients earlier today. He's in Michigan. He says, "Hey, Hunt, how do I count discounts? How should I be classify those in my financial statements?" And there's a lot of different ways that you can look at discounts. Most accountants are not going to care because if you're not collecting the money, you're not going to pay tax on it. So why does it matter? Why does it matter if it's in the sales? Why does it matter if you decrease your sales or if you look at it as an expense? There's different ways to do this. We got to know a little bit more about your specific shop to answer that. But what we're trying to do here is we're trying to get an understanding about these financials, not just to do an end of year tax return. Depending on how long you've been in business, depending on what stage your shop is in, financials are the key to your shop. They're the key to take it to the next level. They're the key to grow it. They're the key to maintain it. Or maybe you have a very good sized shop, but you want to just make it a little bit more profitable. If you don't understand your numbers, if you don't look at your numbers, then how are you going to ever be able to improve it? So that's one thing that we preach all the time. I'm never going to tell my clients something that, just say, hey, just do this. This is the right way to do this. I want to give them a better understanding of, hey, this is why we look at it this way. This is why it's important to know this number. This is why it's important to track this stuff. I can look at financials no matter how they're set up. But one of the things that we like to do is make sure that these financials are set up in a manner, not just to do end of year taxes, but be able to analyze trends, look at key figures, look at key areas of your business. So what we're going to kind of get started here, I'm going to share my screen here while you guys look at the top of my head, is we are going to kind of go into a general overview on a basic idea. And so what we are going to talk about today is, like David said, is a basic understanding of our financials. Now, when I say basic understanding of our financials here, majority of today's exercise, we're going to be spending on the profit and loss statement. It's probably the most important one right now. It's probably the one that you're already looking at the most, but a profit and loss is the best place to start. Really, there's 3 big financial statements that you need to understand or have a grasp on. Profit and loss statement, your balance sheet, and then maybe if you're going to get a little bit crazy, get into the cash flow statement. But for today's exercise, we're going to start on the profit and loss statement. So a profit and loss statement is broken into kind of 4 key areas here. We got our sales, right? Pretty basic. Whatever's coming in the door, that's our sales. Correspondingly, we got our cost of goods sold. Now, if we take our sales less our cost of goods sold, that's going to give us gross profit. After we have our gross profit, we need to pay our overhead. And so then we go down here, we got fixed expenses. And then hopefully we have something left over here, and that's the magic profit, right? If you don't have numbers, if you have brackets around it, if those are red, then maybe we don't have a profit. We actually have a loss here. But even more importantly, we have to understand this. So this is a general overview of what everyone's financial statement looks like. Whether it's set up right, wrong, or indifferent, they all look like this. But what I want to do is kind of go into the basic idea behind this and what I want to look at in the overview of where I kind of start looking at financials. And so when we're looking at sales, sales are self-explanatory. Anything coming through the door is sales, right? Parts, labor, shop supplies, sublet, et cetera, et cetera, et cetera. I like to have all of those split out accordingly so that I can look at the gross profit margins in QuickBooks as well. As a quick aside here, when I'm referencing all of this and also when we actually look at the financials here, I'm going to be talking solely about QuickBooks. QuickBooks is what 99% of our customers use. It's what 99% of shops and other small businesses use out there, and specifically QuickBooks Online. So if we're taking a look at financials here for a shop, we got sales, we got cost of goods sold. Sales we already covered. Cost of goods sold. So cost of goods sold for some people, means just parts. For other people, it means a lot of other things. If your chart of accounts is set up correctly, anything that you are tracking in sales should be tracking in cost of goods sold. Parts, we're going to have parts sales, we're going to have parts costs. That's an easy one. Shop supplies, if you have shop supply costs, we're going to track that. If you split out tires separately in sales, I want that tire split out separately in cost of goods sold. Technician pay. Technician pay is a cost of goods sold because we're selling labor, right? And so we want to make sure that that technician cost of goods sold is up in cost of goods sold, not down here buried in our fixed expenses. Last one that we're going to talk about is Service Advisor. So Service Advisor, we often look at as a cost of goods sold. Now, I know there's different companies out there that look at it a little bit differently, but for this exercise and these numbers that I'm going to give you, we're going to count cost of goods. We're going to count Service Advisor as a cost of goods sold. Anything else not listed there, anything else that I'm not specifically selling to a customer and charging for is going to come down here into our fixed expenses. And so the basic math here is if we have sales less cost of goods sold, we should have 50% of our sales left over in gross profit. So if I have $100 come through the door, $50 is going to go out to my technician, vendor, service advisor, parts, whatever might be, and half of that money is left over. And then we have these gross profit dollars that allows us to pay overhead and then hopefully allows us to have profit left over as well. And so if we have the sales come through, after the cost of goods sold are paid, we have 50% gross profit left. We're expecting to see 30% of our sales or less go into fixed expenses. That means that if we have 50% of our sales in gross profit, we spend 30% of our sales in our fixed expenses or our overhead, we should have 20% left over here at the bottom line. That's how it should work in a perfect world. No two shops are the same. And so I don't want anyone to kind of look at this as an absolute fact, but this is kind of a general starting point of where I start to analyze things. If this is at 49 and our overall expenses at 27 and the bottom line is still 20%, there's a lot of different ways to slice the pie here. Maybe that's just how your shop operates, or maybe that's how your shop is operating right now, but it could be even better. I see this number as high as 30, 35% for profit. Meaning if you got $1 million a year shop, I have people that are running $350,000 in profit on a shop of that size. It's not going to work in every single area. You have to have low overhead. You have to have good pricing, but it's not unheard of. So to kind of put this into hard numbers, and so you can kind of imagine what this would look like, let me kind of hide this stuff here. All right. And so let's talk about $1 million a year shop. And so in the current model that I'm talking about here, if I have a shop that's doing $1 million a year in sales, I'm going to expect my cost of goods sold to be $500,000, which is going to leave us $500,000 in gross profit. On that same $1 million a year shop, remember, we want our overhead, our fixed expenses to be at 30% or less. Let's just say that we're hitting a target dead on and our fixed expenses are going to be $300,000. After everything is said and done, the bills are paid, we should have $200,000 left over at the bottom line. Now, this is where I start when I start looking at financials, and this is what I, urge you to do as well. You need to figure out what to focus on. Sometimes when people look at the financials, they start trying to analyze way, way, way too many different things. At the end of the day, what are we trying to do when we look at these financials? We're trying to do one thing and one thing alone. Figure out, are we making money? Or are we not making money? That's the first thing, right? We're looking at this, and a lot of times people go straight to this bottom line. Am I making money? Am I not making money? If you're doing nothing else, at least do that to know where you stand. Maybe you are making money. Maybe you're not making money. Unless you're looking at these and they're set up correctly, you don't know. Next thing that we need to do, though, is we need to figure out what we need to do if we aren't making money or if we are making money. If we aren't making any money, then we need to make some changes or figure out why we're not making money, why we're not profitable. This industry is hard enough, let alone if we're not making any profit on this. So we really need to understand how we can improve our business and what we need to focus on. If we are making money, maybe it's not for the entire year, but that month, even more so, I want to understand why we made money that month. What happened? What did we do differently? How can we replicate that? Or did we have possibly a classification issue? You know what? There's no way I made 85% gross profit. Something's missing here. A bill's missing, right? So we need to dive into this and we need to understand this. And so a big example here that I look at, and we're kind of we'll talk about this $1 million a year shop, is what happens if I'm looking at this shop and the numbers look like this. So we're going to take out these numbers and we're going to slightly modify this. And so if I'm looking at this and my cost of goods sold is $700,000 and it leaves me at $300,000 of gross profit, we no longer have $200,000 of profit left over. We have zero, right? So we got $1 million a year coming in, $700,000 going out to cost of goods sold, which leaves us $300,000 in gross profit. You can see in this example of the shop that we looked at before, our overhead is exactly the same, still at $300,000. And so if I'm looking at a shop like this, I'm already doing a quick math here. This should be at 50%, we're at 30%. Uh-oh, that's a problem area right there. All right, our overhead should be 30% or less. You know what? Dead on. We're good to go. Nothing to deal with overhead. I'm probably not even going to look at it right now because that's not my main focus. My main focus is here on the pricing, the gross profit, the productivity, and I need to understand why. So that's where we need to start. We need to kind of figure out what exactly is going on with this business and where we need to make changes here. And I don't want a ton of changes. I want to figure out where exactly my pain point is. And so let's kind of move on here. And I want to take a look at actual shop's financials here. So what we're going to do here is we're going to take a look. Hopefully this is big enough here. It looks like we're good to go. And so what this is financials I actually got from a shop owner. He was having some issues understanding his financials. He thinks he's making money, wasn't really sure if he's making money. And he said, Hunt, I just really can't get to the bottom of what's going on here. I know something's right. I just can't put my finger on it. And the one thing that, I said is, hey, you know what? I look at these all the time. Unfortunately or fortunately, however you want to look at this, I can look at financials no matter how poorly they're set up. It's what I do on a daily basis, right? We have 600 clients, so you name it, we've seen it. But for you, you've probably only seen one set of financials, the financials for your shop. And if they're not set up effectively, if they're not set up in a correct manner, then you're doing yourself a disservice and you're probably not going to be able to make any sense of what's going on there. If you can't make any sense of what's going on there, we can't understand that, we can't improve it, we can't analyze it. We are really just left with nothing. And so he sent her these financials. He said, Hunt, try and take a look and see what's going on here. And so first thing, just like we were talking about before, all right, before I get into anything else here, let's see if this person's making any money. So you can see the general categories are right. We got our sales category, don't have a whole lot of detail there. We got our cost of goods sold category. Again, not a whole lot of detail there. We got our fixed expenses. Some of the major categories seem to be there. Looks like we got a big lump there for payroll expenses. We're not really sure what's in there. And then we go down here. So if you see, there's actually a small little, let me see if I can highlight this here. A small little minus sign. So net operating income is actually at a $43,000 loss. And then we have this monstrous adjustment here, which all of a sudden turns us into a $24,000 profit. So remember, the first thing that we want to do is we want to figure out, am I making money? Am I not making money? If I'm looking at this, and I went back and I told them, I said, I'm not even sure if you're making or losing money right now. You know, not only are these financials not set up correctly, I don't think that they are even accurate. You know, it's not even just a formatting issue. I think we have a classification issue here. So of course this doesn't make sense to you, because you don't know if this is things that you need to keep on leaning into, if you're actually making any improvements here, or things actually sliding in the wrong direction. Are we losing money? Are we making money? Where do we stand? And so this is the way that QuickBooks shows up in the collapse format. And so if we're looking down through this in a collapse format, we got the sales, we got the cost of goods sold, we got our expenses. I can't see the detail for the sales. I can't see the detail for the cost of goods sold. I can't see the detail for the payroll. I really just don't know what's going on. And so the next thing that we need to do is we need to expand this profit and loss. And when you expand this profit and loss statement, what you're left with is you're left with this. And so this is the same exact financials, but this is just the expanded format. You can see that buried in this, there is actually good information. All right, perfect. We got labor sales. We got parts sales. We got shop supply sales. We got sublet sales. Hey, that negative category that was in sales, that's actually our discounts. So all the information is in there. It's just not set up correctly. If we go down here to cost of goods sold, hey, you know what? We actually do have technician payroll in there, cost of mechanical labor, cost of parts, cost of shop supplies. All this information is in here. It just needs to be pulled out, massaged, and set up correctly. If we go down in here to office supplies, we can see there's a lot of different things under there. If we look into pay and benefit groups, it's starting to give us a little bit more detail of what's going on here. You can see here, I'm scrolling through pages. I think this entire expanded profit and loss statement is 4 pages. Every single thing that I need to talk about this client's business, to talk about this shop's business, is in these 4 pages. I'm going to be picking and choosing. I'm going to be pulling stuff out. I'm going to be doing calculations off of these financials to be able to talk to him and give him some guidance on this. But this is not something that you realistically could expect to do yourself. One of the big things that I hear all the time about financials is that people are intimidated by them. If I'm looking at something like this, that's 4 pages long, that we got all kinds of categories, subcategories, the percentages look weird, it's kind of different classifications. The only thing I can think is, of course, this is overwhelming, right? This is not set up in an effective manner. This is not what I need to help me understand my business more. If anything, this is just going to reinforce the idea that I'm not going to be able to understand my financials. And I just, you know what, I'm going to leave this up to the professionals. Let's just do our taxes. I'm going to focus on just doing more work and see what happens. But what I did, I said, you know what, time out. Let me take this information, let me kind of polish this up, and let's see if we can turn this into a usable financial statement. And so what we are left with is this. And so I did not change anything. I did not do any journal entries. I did not have to do any adjustments. What I did is I unsubbed some of the categories. I subbed some of the categories. And so I just cleaned this up so it's effective, so it's useful. I want to be able to look at my financial statements in a condensed format, because I want to be able to look at this and within a couple minutes kind of get the quick hits out of this. Take a look at gross profit, take a look at overall profitability, and just kind of figure out what's going on here. And so when I look at this, now we got all of our sales categories split out. Perfect. Parts, labor, shop supply, sublet, they're all there. Correspondingly, I'm tracking the cost of goods sold for every single one of those categories as well. Got my service advisor split out. What we did down here is you can see the payroll. Instead of having that large payroll expense, I was able to split it out and say, all right, how much of that is going to the officer and how much of that is going to general benefits of the overall business? And you can see, even more importantly, I figured out if this person was making any money or not. And so before we were looking at this, we thought it was going to be a $24,000 profit here. But in actuality, what it ends up looking like is a $41,000 loss. And so right there off the bat, we know that we have an issue. What's going on here? We need to start taking a look at this business and figuring out why we're not making any money. And so if you remember what we were talking about before, we are looking at the general overview of some of these key areas to try and figure out where we need to focus on. And so if I go up here and I take a look, we're going to first take a look at and see what our gross profit is looking like, see what our pricing and our productivity is doing, and see what those numbers are. And so right off the bat, I'm looking at the gross profit, and I realize for this shop, his gross profit is 37%. Remember, our target there is 50% or above. And so right off the bat, I know that I need to dive into the gross profit a little bit and figure out why we're a little bit low there. Correspondingly, if I look down here at the fixed expenses, we're at 46% of sales in our fixed expenses. So we kind of have the double whammy here, right? We have low gross profit, high overhead, which is leading us to a loss here. Now, the tricky thing about this is when you're looking at this and you have really what seemingly looks like everything is going wrong, where do you even start? Well, hey, my gross profit is down. My fixed expenses is too high. Where should I even go from there? I don't even know. Should I just give up? Should I just turn in the keys? You know what? This is so frustrating. I'm not making enough money. I'm stressed to, I'm as stressed as I can ever imagine. And I got no money in the bank. Where do we even start? So one of the biggest things that I like to talk about is the fixed expenses more or less are what they are. I would not start my time looking at the fixed expenses. Now, when I say that, you got to take this with a grain of salt, because I am not saying, hey, go out there, spend frivolously, buy whatever you want, kind of get any sort of subscriptions that you don't need, kind of just blow your money on your fixed expenses. But realistically, the fixed expenses are where I see a lot of people starting. If they're looking at this and they say, well, I'm losing money, I'm losing $41,000. I need to go out and I need to start cutting expenses. I need to start going down through these fixed expense categories and figuring out which one of these can I cut. And it's just not the right way to do things. You're never going to be able to nickel and dime your way into a substantial profit. Could you take yourself from a 19% profit business to a 20% by making overhead cuts? For sure. But we got to keep in mind here that most everything that we see for an auto repair shop, you're spending that for a reason. And while cutting those expenses on the short term might save you some money, what is the lasting impact of that? For example, advertising expense. Advertising expense is usually one of the largest expenses that an auto shop has. This person really doesn't need a whole lot of advertising, so his is kind of on the smaller side of things. But if we're looking at this, advertising is something I hear people talk about all the time. You know what? Things are tight. I might just cut down on my mailers. Mailers are expensive, but mailers are expensive because they work for a lot of people. And so if I cut out those mailers, if I drop my advertising budget in half, I'm going to immediately save money, right? I'm not going to get charged the following month. Perfect. I saved money. But what is that going to do in the long term? What is that going to do to our new customer acquisition? What is that going to do us to our marketing, budget? What is that going to do with our future marketing potential? We're shooting ourselves in the foot for kind of a short-term problem here. Take a look at some of these other ones. This person looks at some of his benefits as an expense. A lot of times I look at it as a cost of goods sold, but this is payroll taxes. This is health insurance for his employees, and he actually has a retirement plan for his employees. Yeah, he's spending $30,000 for this period. What happens if you go back to your employees and say, you know what, I'm not going to pay for 100% of your health insurance anymore. I'm going to pay for 50% of it. Again, in the short term, next month, it's going to be cheaper to pay that insurance bill. But what happens in 2 months when you lose a technician because they say, you know what, I worked there because you guys provided good benefits. Now you don't even have good benefits. What is going on here? Why are you taking this stuff away? Or you get to something like rent. Unless you own your own building, your rent is what it is. You can go back, you can try and renegotiate with your landlord. They probably don't care. They set fair market value. If you want to pay it, so be it. If not, you can move on. And so some of these things here are stuff that we can't change. Some of these things are stuff that we should not change. And a lot of this is what it is. It's the cost of doing business. And so when I look at this 46%, the reason that I look at that 46% is that it's a percentage of sales. And so it allows me to look at the relative cost based on our sales. And so when I look at this, my goal here would not be to try and lower this from $230,000 down to $160,000 to make that 30% work for my current sales level. What I'd be trying to do here is I would say, okay, this business has $230,000 of expenses. How do I drive my sales and how do I drive my gross profit so that it makes sense, so that those numbers come back in line? So then that leads us up to this cost of goods sold section. And so what I'm going to do here is hide this, and we're going to start taking some notes here. And so at the end of the day, this business is broken down to two different things. There's a couple smaller things here that we look into that we kind of get into more detail. But at the end of the day, we're selling parts and labor here, right? There's people out there, you can read all you want about this stuff, that you can make this as complicated as you want it to. But at the end of the day, if you do parts and labor well, you sell them effectively, and you're productive and you're efficient, you're going to have a pretty good business, and you can pretty much screw up everything else and you're still going to do just fine. So the first thing I look at is, again, we're talking about fixed expenses are what we are. How do we drive our sales? How do we drive our gross profit to make those fixed expenses come into line? So first and foremost, we got to see what we're doing to see if we have an area in parts that we need improvement or an area in labor that we need improvement. So let's start with parts, because parts is an easy one. And so what I'm going to do here is I'm going to take our parts costs less our parts, or I'm going to take our parts sales less our parts cost. So we have $238,000 in parts sales. We have $150,000 in parts cost. I'm going to use a cheat sheet here so you guys don't have to see me type it on a calculator. So we have about $90,000 in parts gross profit. Again, just like anything else here, we look at that as a percentage, not an absolute number, so that it's scalable to different sales months. And so right now, we are at 37% gross profit for parts. Okay, general target for parts that we see is around 50%. Just like some of the percentages I talked about before, 50% is a decent target for most general repair shops. If you're doing diesel work, if you're doing heavy duty work, if you're in a Euro market, might be on the lower side of that. I have people that get 60, 65% for parts. And so it kind of runs all across the board, but 50% is usually a pretty good rule of thumb. So we are at 37% right now for parts, but there's one thing that we haven't factored in here: discounts. If you remember before, that discount is made up of two things: labor discounts and parts discount. I don't care what my sales are if I discounted off all of my profit or if I discounted off all of my margin. And so I need to factor my discounts. So once I factor in my discounts here, I'm not actually making 37% gross profit on my parts. I'm making 33% gross profit on parts. Right then and there, I know I have a parts gross profit issue. We're just not making enough money on parts. We're not marking them up correctly. Our parts matrix is not set up correctly. Or you know what I actually see a lot? Our parts matrix is set up correctly, but our service advisor's not following it. They're overriding it. They feel that it's too expensive. They feel that it's not working. The reason I like to start with parts, and the reason that I argue that parts is one of the easier things, is because there's nothing that you have to do. We have software that does this, right? I think David might know a pretty good software that does this stuff, but this is exactly what Shop-Ware is made to do. You set up your margins, you put in your percentages, you put in your matrices, and it just turns around and it generates what you're supposed to sell to the customer. That's it. Leave it alone. You've set your margins. You need to analyze this, make sure it seems fair. There is going to be certain situations where you probably are going to have to rein it in, but those should be the exception, not the norm. 95% of this stuff is going to go through on a general matrix, get billed out to a customer. Every once in a while, we're going to come in and override it, right? So first things first on this, when I was talking to this client and communicating with them, is I said, we got to look at your parts gross profit margin. We got to increase your parts gross profit margin. Got to take a look at your matrix. If your matrix looks okay, start analyzing some tickets, see why we're not making the margins. Do we have a theft issue? Do we have a core and warranty issue? There's a lot of different things that kind of skew it a little bit, but if this much of a decrease, I'm going to guess that's just something we're just not pricing this stuff effectively. So take a look at that, fix that, and then if that was our only issue, then that's a pretty easy one to solve. Literally, if you want to increase your parts matrix by 20%, by 50%, by 100%, whatever you want to do, it's essentially a couple clicks of the mouse away and it's done. Makes our life very easy here. So like I said, we got two issues we got to figure out: parts and labor. You get those figured out, you do those well, you're going to have a perfectly fine business here. So let's move on to the next one. So parts we've taken care of, parts we've analyzed. Let's talk about labor. So labor is not an easy one. Labor is not an easy one because we have humans involved. Anytime we have humans involved, we have variables, we have incentives, we kind of get into the psychology of the entire thing. And so labor is really made up of two different things. It's made up of pricing, and it's made up of productivity. If your pricing is good and your productivity sucks, you're not going to have a good margin. If your pricing sucks and your productivity is good, you're not going to have a very good margin either. You got to hit both of those. You got to check both of those boxes to have a successful and profitable business. But first things first, just like we talked about in parts gross profit, let's see where we stand for labor gross profit. And so labor gross profit, again, we're going to take the labor sales minus the labor cost, and we're going to figure out that for the technicians alone, this is just technicians, not service advisor, not admin, not officer, we are at 60% gross profit. So 60% gross profit for labor before discounts. Okay, so once we factor in that discount, we are now down to 54% gross profit. So this is not a hateful number to look at. Usually for labor gross profit, 60% or above is kind of a decent target. But we know this bottom line is low. We know our overall gross profit is low. And so we need to do better in the labor gross profit. And so we need to dive in and figure out what's going wrong here. And so when I talk to, this person, first things first, what is your labor rate? And so I talked to him about this, and he said, okay, my labor rate, and I'm going to go over here to the whiteboard so you guys can see this a little bit better. Erase all this stuff. Clear all that out. So I asked him, I said, all right, what's your labor rate here? His labor rate's $110 an hour. And so I said, you know what, that's pretty good. Like I said, we got clients in 49 states. So $110 could be super, super high for some of my clients. It could be super, super low. Kind of get a general overview of where it stands. I'm not an expert on this by any means, but usually we can kind of see if we're in the ballpark. One of the first things that I asked, though, as far as labor rate is just referencing them to themselves. And so I said, all right, you're at $110 an hour. When was the last time you had a labor rate increase? Something to keep in mind here is that labor, unlike parts, is just a set target. Whatever you have your labor rate times whatever the book time is, that's what it's going to charge the customer. We'll ignore the idea of labor matrices and stuff like that. It does not get it automatically adjusted like parts. Parts costs go up, parts sales go up. Labor is just a set peg. That being said, everything else in this world is getting more expensive every single year. Technicians are getting more expensive. Overhead is getting more expensive. And in line, we need to see that our labor rate is going to be increasing on an annual basis. General rule of thumb is your labor rate needs to increase about 3% every single year just to keep up with inflation. So if you're at $100 an hour last year, you need to go to 103 this year just to tread water and make the same amount of money that you did last year. When I talked to him, he said, you know what? It was at 110. It was 110 right now. It was at what was it? It was at 102 last October when I looked at this, and we actually increased the $8. So right off the bat, I know that the pricing is about in line. Another thing that I asked is, well, how much you paying your technicians? Let's see what it would look like in a perfect sense. He talked about his technicians. Technicians were making mid $20 an hour. Again, looking at that spread, the price that we're selling to customers versus the price that we're paying sounds just fine. Now, if you're in an area that has super high technicians and you're paying a technician $40, $45 an hour, then you know what? Our labor rate needs to dictate that, and we need to be selling this accordingly. Our cost is expensive, so we need to translate some or all of that over to the customer. So the pricing side of this is okay. And so, if the pricing side of this is okay, then it could only lead one thing, and that's productivity. Productivity is probably the number one issue that I see with shops. It's a number one issue that is affecting people's profitability. It's also probably one of the biggest issues that I don't feel like people spend enough time at looking at or understanding. And so what I do when I look at productivity is I get some numbers, and this is an exercise that I would like you to do with your business. And so I first want to figure out how many technicians that I have. And so when I talked to this guy, I said, how many technicians do you have? He has 2.5. He's got 2 A techs and he's got kind of a B tech, C tech. He doesn't really expect him to crank out full-time hours. So for this exercise, we're going to call that 2.5. Then the next thing I need to do is I need to figure out how much in labor sales that I had. And so for this period, we had $287,000 in labor sales. And I want to figure out how many labor hours I sold. And so if my labor sales were 287,000 and I divide that by my labor rate of 110, that comes out that I had 2,616 hours sold. Okay, so now we know how much we produced. What we need to do is we need to figure out how many hours we had technicians there. So the average technician or the average full-time employee, no matter what industries they're in, works about 2,000 hours a year. You want to do the math, 40 hours times 52 weeks, it comes out to be right around 2,000 hours. And so if I have 2.5 technicians there, I had technicians there for 4,766 hours. We sold 2,616. We had people on site for almost 4,800. This is productivity. This is what we're looking at. The closer and closer that we can get to 100% productivity, obviously the better. Is it realistic to expect 100% productivity? Probably not. Usually when I'm looking at it this sense, when we're measuring the street rate, not the actual hours sold out of Shop-Ware, I'm looking for about 75% efficiency. If I got a guy there for 40 hours a week, I want to get paid for 30 hours at my street rate of, for this example, 110. If I'm looking at these numbers right now, this shop is doing 55% productivity. Okay, and so on average, the technicians, if they're there for 40 hours a week, they're billing out a little bit over 20. That's before discounts. If I factor in the discounts, we no longer sold 2,600 hours. We sold like 2,200. This should be a 0 here. We have about $40,000 of discounts here. And so those discounts mean I have less hours sold. If I didn't get paid for them, then I don't care about it. So we no longer have 55% efficiency. We have 47% efficiency. And so if you remember, really, this comes down to 2 different things here. Overall business, general overview here is we want to have good margins on parts, good margins on labor. We do those well, we're going to have a pretty profitable business. Specifically on the labor side of things, again, we have 2 different issues there. Are we pricing effectively? Which we looked at this and we say, you know what? We're comfortable with the pricing side of it. What about productivity? This is the tale of 2 cities. Pricing is very good, but all of this is getting killed by productivity. His employees are hourly. And so if you want to do the kind of general overview on this, for every 2 hours that you pay that technician, he's getting you an hour of work. And so if you have someone that's costing you $25 an hour, every hour that he bills out is costing you more like 50 because you're paying him 2 for every 1 that he's getting you. This is the biggest issue that I see with shops, and this is the biggest issue for a lot of people that is hindering them from making the kind of profit that they really need to. And so when I go back here and I take a look at these financials, what I'm going to go back and propose, and what I did go back to propose to the shop owner, is we need to increase our parts gross profit. We need to drive the parts gross profit. What specifically should it be? What specific tweaks? There's plenty of different resources that you can look and figure that out. And the next thing is on the labor side of things, I don't think that we need to increase our labor rate. We need to figure out how we get more productive. And, when we're looking at productivity, first and foremost, we got to figure out if we have the cars. If you don't have the car count, then maybe that's your productivity issue. Maybe you need to go do advertising. This person doesn't do a whole lot of advertising because he says he has more work than you know what to do with. If you have more work than you know what to do with, how are we at 50% productivity? And so what, we kind of want to do here is we kind of want to forecast what this business looks like if we're able to hit the numbers that we think is reasonable for this size business and for this staff. And so if we are doing $500,000 in sales, let's scroll up here a little bit. Hang on, clear this. If we're doing $500,000 in sales right now at 50% productivity, if we were to drive that to 75% productivity, now we're doing $750,000 in sales. Okay. We went from a $500,000 shop to a $750,000 shop. Now I know we got to have the work there. We got to be able to do this, but physically we have the capacity to do this and still be at 75% efficiency. That's only asking the technicians to bill out 30 hours a week on average. So if we have $750,000 in sales, we tweak our parts gross profit margin a little bit, then that's going to turn around and that's going to give us that 50% gross profit that we talked about. And so instead of having $183,000 in gross profit, now we have $375,000 of gross profit, right? 50% of our sales are now going to gross profit. And so if we have, hang on, I'm going to erase this here. So if we got $750,000 in sales, we got $375,000 in gross profit. Our overhead, like I talked about before, is staying exactly the same. We're not messing with that. We still got $230,000. That's what the nut is. That's what we need to cover. And so if we take out our overhead here of $230,000, we're left with $145,000 in profit. If you do the math on this, we're now at 50% on gross profit. Check. We're now at 30% on our fixed expenses. Check. And now, most importantly, we're at 20% profit. We didn't touch the overhead. We didn't touch our fixed expenses. We really didn't tweak anything other than our parts matrix. The only thing that a customer would be looking at here as a pricing increase is a modest increase on our parts gross profit or a modest increase in our parts sales. Labor, we didn't touch the labor rate. We didn't touch the labor matrix. We just, analyzed and identified that we had an issue there with productivity and made changes to make this more productive. Now, I know that some of this stuff is oversimplifying. I know that you're probably sitting there thinking, well, Hunt, this is easier said than done. Of course it is, right? But we need to figure out what our underlying issues is before we can start making changes. Because if I'm going back to this business owner, that was overwhelmed, that just said, hey, everything is going wrong here. When I look at this, I say, you know what? Everything's really not going wrong. We're close. We're very close to having a super successful business here. You figure out the productivity issue, you fix your parts gross profit, you're going to reap the benefits of it. It's as simple as that. If you can fix those two issues, everything else falls in line. And so, hopefully he's doing it. I haven't checked in with him a little bit. But, like we said, we set these financials up in a way that they hopefully make more sense, that we can not only identify the issue of what's going on right now, but also as he moves forward, he's able to run these numbers. He's able to track this. He's able to maintain his productivity levels. He's able to verify and make sure that his parts gross profit, his labor gross profit is where he needs this to be, and to hopefully be able to drive this business and take it to the next level. If we're just setting this up for the whole idea of we're going to do this for end of year taxes, we're ignoring one of the biggest pieces here, which is able to drive this business and able to treat this as true management level financial statements and something that will really help you not only understand your business, but make more money. So that's all I got for today. I hope that was helpful for you. I hope this is something that you can go turn around and take a look at your shop. And, hopefully kind of demystify this a little bit to make sure that, you guys are able to do this with your own numbers.
Awesome. Thanks, Hunt. That was awesome. Definitely have some questions. One question that someone has written is kind of like, all right, after seeing this, I'm going to say, okay, now I think I need some help. So what's a first step, right? Like if someone's seen this webinar and like, okay, we're not doing these things. These are things that we need to be doing. Like what do they do?
So I guess it would depend on what they need to look at I think the biggest thing that you need to do is you need to figure out where your issues are, right? And so when you're taking a look at that, you need to figure out where you're struggling and able to make a focus on this. Too many times what I see shop owners do is they have this kind of shotgun approach. I'm going to try to change this. I'm going to try to change that. Figure out what you're struggling with the most and analyze that. If you're struggling with your parts matrix, go out there. I mean, there's coaching companies, there's free resources, there's tons of things out there where you can look at your parts matrix and see what it is. Maybe you don't have a specific target, but you need to increase a little bit more. Maybe just go into Shop-Ware and increase your parts matrix. The first thing is, it's kind of a broad answer. It's probably a non-answer there, but really depending on what it is, you're going to just have to focus on one thing and try to improve that.
Great. That's helpful. Can you tell everyone, like when you're working with your clients, like what is your cadence for how often you're interacting with them? What does a relationship look like for someone that, that you're working with as their accountant?
And so it really depends on what stage we're in. And so when we're working with them early on and they have financial statements that really are just kind of a train wreck, we're going to be working a lot more closely to make sure not only those financials are up to date, accurate, and useful information, but making sure that they're understanding this. Financials are something that's not going to make sense for you to overnight. It's probably going to be a couple-month process. You're going to be learning. You're going to say, okay, I feel comfortable. Some things are going to happen. You're going to be like, all right, now I'm super confused again. And you're really going to build on your skills. Once we've been working with you a couple months, then, we'll might be start out checking in on a monthly basis, going over the numbers, looking at trends. And then maybe it goes to kind of a quarterly. Hey, let's kind of do some specific itemized focus things on what you're struggling with and making sure that those are improving or maintaining.
That's helpful. You mentioned several times in the presentation and just now parts matrix. One of the questions was, is there an industry standard for parts markup in your opinion?
No, there's not. It really depends. I mean, I use 50% as a good rule of thumb. The reason I use 50% as a good rule of thumb is because on average, it's probably the general norm of what a general repair shop should shoot for. And it also makes super easy math. If you buy a part for $50, you should sell it for 100. Euro shops are going to struggle with that. Euro shops that I deal with usually are kind of in the mid to lower 40s. Diesel shops, again, are going to be a little bit on the lower side just because a lot of these parts are more expensive and dealer only parts. For general repair shops, I have people that get 65, 68%. That is not the norm though. But yeah, 50% I think is kind of a good target there.
Got it. Do you have any comments on what you should be charging for labor and determining what your labor rate should be? And if a shop comes to you and says, hey, this is what we charge, I don't know if we should, can you talk a little bit about labor rates?
Yeah, so labor rate, you can look and there's a lot of exercises that people have out there on how to calculate what your labor rate should be. But one of the good rule of thumbs that I take a look at is I take a look at what our costs are. And so as we know, we're shooting for a 60% gross profit for labor, right? And so I need to figure out if it's possible to get that. And so if I take a look at this, and let's just say I'm going to use this magic number of $100 an hour labor rate, and my highest paid tech makes $45 an hour. If I'm at 100% efficiency, if that tech is billing out 40 hours every single week, the max gross profit that I can make is 55% gross profit, right? And so right off the bat, I know my techs are expensive. I don't think that I'm going to be at 100% efficiency. And so I'm going to need to increase this to 115 to 120 to get that to a level where it's manageable for me. Now, if you're in a situation here and you know that maybe you don't have the most productive staff, you're going to have to increase this exponentially to make up for that offset. And so let's say that you have a guy, you're in the Bay Area, super expensive technicians, and you have a guy that makes $45 an hour and is 50% productive. You might have to have this thing up at $180 or something to make sense for you. But the biggest thing is you got to look at is you kind of back into these numbers, see what your technicians are costing you, see what your productivity is to make sure that that's in line for the target of what you're trying to shoot for.
That's super helpful, Hunt. Do you ever run into shops where when you start to dig into the numbers, you're looking at tech efficiency and seeing that they're actually just not that efficient, and that lack of efficiency is actually having like a significant drain on their bottom line. You touched on it in the webinar. I bring it up because it's something that I've actually been talking with a couple people about. It's a feature in Shop-Ware, that isn't perfect, but can be. It all depends how you're using it. Like, what are your thoughts on tech efficiency, and how large of an impact can that have on your profitability?
Yeah, it's huge. I think that it's probably one of the biggest things that I see a lot of shops getting wrong, because as we showed before, you can do everything right. And if you're not doing the productivity right, if you don't have productive techs, it's going to kind of torpedo your bottom lines. But it's something that's super prevalent. And I don't think it's ever a shock when I'm talking to a shop owner about it. If I go and I say, hey, you guys are 50% productive, they're going to say, yeah, that sounds about right. What is the shock, though, is how much that's impacting their bottom line. They realize that there's an issue. They don't realize of how much that's affecting them. But usually what I do here to figure this out is you're trying to make this simple. A lot of times people try to overcomplicate financials and anything like this. I try to make this as simple as possible because it doesn't need to be complicated. And so for when I'm looking at that shop, and let's just use this same shop that has 2.5 technicians. If we have a productivity issue, I know that the guys are working 40 hours a week, right? So if I have 2.5 techs, if we're at 100% efficiency, that's going to be 100 hours a week. We know that we're going to shoot for 75%, right? That's where we're going to start. And so we need them to be turning 75 hours a week. That's all you're going to be looking at. That's all you need to Shop-Ware to do. Go and see how many hours we've sold. Hey, if we're at Friday and we've sold 70 hours, we're right on track. We're doing perfectly here. If we're at Wednesday and we've only sold 15 hours, then we need to know where we change. But instead of looking at this effective labor rate and all kinds of different things, which is all important in our own right, let's keep this simple and just look at straight hours and say, all right, where do we stand? Where do we need to be? And then possibly even incentivize the guys on this stuff. Hey guys, we need to be at 75 hours. Why did we not hit it? Or, hey, maybe we did hit 75 hours. What did we do correctly? But yeah, huge issue. I don't think overlooked as in shop owners don't know about it, but probably just don't get the impact that's making to their bottom line.
Yeah, I think all shops are definitely aware of tracking tech efficiency, but I think I can imagine when you tell them, oh, well, that translates to X $100,000, et cetera, that, in lost productivity every year, that's really a big impact. So we talked a lot about parts markup. We talked about labor. We talked about tech efficiency. What are some of the other key factors that really go into driving profitability for a shop that might get overlooked?
Yeah, I think those are the two big ones, and maybe some things that kind of go around that. Parts is what it is. That one's kind of just a on and off switch. Either you're doing that well, or you're not doing it well, or you're pretty darn close. But really, I think a lot of it comes around is how much you're maximizing the potential of not only your specific employees, but your overall business as a whole. And so a lot of times I see people, we're doing that exercise before where they're like, hey, you know what? This business doesn't work at $500,000 a year. It needs to be at 750,000. And the misnomer there is, all right, I need another guy. I need to add another technician to take this to the next level. Whereas what they should be looking at is, how do I maximize what I have now? We don't need to actually add another guy because, yeah, it's going to drive the sales, but it's not going to fix our underlying productivity issues. And so I think the biggest thing is people need to be cognizant of is taking a look at what they have and make sure that they're maxing out the potential of what their business can do. And the same flip side, also being mindful of those same limitations. If you have 2.5 techs, you want to do $1.5 million a year, it's just not going to happen, right? Unless you find some superhuman people or triple your labor rate, you got to make sure that it's reasonable for what your expectations are.
Awesome. Super helpful. Do me a favor, Hun, just put your email up there on the whiteboard if you want to erase that, just in case anybody has any questions or is interested in your guys' services. I want them to be able to know who to contact.
Sure. So it's really easy here. It's just Hunt at
Right.
Let me see that.
Yep. All right. Well, I appreciate your time. I really, really do. This is generally a topic that I think is not the most engaging, but I can tell you that from the time you started to the time you left, we only lost one person, and they messaged me and said it was because of internet connection. So you're batting 1,000, which is great.
There you go. No one fell
yeah.
asleep. Well, hey, maybe they did, but at least I didn't have to see him, right?
Yeah, exactly. So thanks a lot, everybody, for attending. If you guys have any questions for Hunt, you can get his contact information, or if feel free to reach out to me and I can put you in contact with him. But that will end our broadcast for the day. Thanks a lot. Hopefully we will see each other in person again, maybe at one convention sometime soon.
Awesome.
But everybody else have a good rest of the day, and thanks a lot.
Thanks, David.
All right, take care. Bye-bye.
See ya.
Done.